I'm Dr. Benjamin F. Chavis Jr., and this is how to get your money right. Bynum, thank you for joining us on Get Your Money Right.
Oh, thank you for having me.
Tell us where you were born. I always like to deal with your upbringing.
I was born in New York, but I am a product of the reverse Great Migration. My parents were from North Carolina, and when my sisters and I were starting school, they decided they prefer to raise us in North Carolina.
Okay.
So I've been in Mississippi for about 30 years, but I got there after I attended college at University of North Carolina. I think following your footsteps to a significant degree.
Thank
I think
you.
we have a similar experience. I was the chairman of the Black Student Movement
at UNC Chapel Hill.
At UNC.
I was the chair of the Black Student Union at UNC Charlotte.
And as you know, there weren't very many students who looked like you and me on those campuses. There were a few more when I got there, thanks to some of the work that you and others had done. But we were still a significant minority, and that's where I went to school. We were able to actually have the first tenure decision ever in the history of University of North Carolina overturned. Dr. Sonia Stones was denied tenure, and my first day as chair of the Black Student Movement, we protested at a trustee meeting and were successful in getting that overturned. The only time until Nicole Hannah-Jones' recent overturned decision. I did that and then thought I was on my way to law school. And it's really exciting to be here in the Thurgood Marshall building because I wanted to be a Thurgood Marshall, but I was waitlisted and ended up working at an organization that was trying to help employees that were losing their jobs in the mid-'80s because of plant closings, not because the businesses weren't viable, but because they were more profitable south of the border and elsewhere. And so we decided to help those employees buy the companies, employee ownership. And when we would go to banks to try to get financing, they weren't as interested in financing the businesses that were run by blue-collar folks, women, people of color. And so we decided to start our own financial institution, and that's how I diverted from law school.
So tell us about all the Hope Enterprises. I know you have a relationship with Wells Fargo. Tell me about it.
A family of organizations that, as you said, drive capital into capital-starved places.
Right.
In the Deep South, we don't have major banks that have a significant presence in our communities. And so we work with major banks like Wells Fargo to be a conduit for making sure that people in these communities have access to the kind of resources and tools that a Wells Fargo can bring to bear. We are also in a very high poverty community in region. Mississippi, Louisiana, Arkansas have some of the most entrenched, deep-rooted poverty in the nation. That's long-standing, and so when we're working in places like Bynum, Mississippi, if we had every deposit in Mississippi in our credit union, that would be about $1.25 million. Hardly enough to support the homes, the businesses, the education, the healthcare that a community needs. And so if we're not going to be able to raise deposits in that community, we need to import that. And so we need partners. And Wells Fargo has been a critical partner to us over the years, probably more than roughly $15 million directly in Hope that we've used to expand our work across the Deep South, and probably another $8 or $9 million that we have been able to provide to homeowners to help them start to climb the economic ladder.
The partnership works. So to me, don't you think there should be more attention to what works in our society? There's a lot of attention to what doesn't work. one of the reasons why we do this program about Get Your Money Right is to raise the level of aspiration of what can be accomplished. And you have a vivid example of accomplishing progress in the financial services.
Well, I think the example is the people who we serve. For example, we partner with Wells on a program called Neighborhood Lift, and that provides down payment assistance to help people become homeowners. We did that on the Mississippi coast in New Orleans after Hurricane Katrina. We've done it in other communities in the Delta since then, and it makes a huge difference when we're working with families whose net worth is so low, who when you look at the wealth gap between black and white families, it's roughly 10 to 1, 100 to 1 for black families with children compared to white families with children. And so we have to provide them with a ladder to climb the economic, climb the economy, and they can't do it by themselves. And so these partnerships help us to close the gap and put them in a position where they can become a homeowner.
What is the history of expanding home ownership in the Deep South?
There's a lot of challenges to home ownership, but you also you see that people are paying as much for rent as they would for a mortgage.
Right.
We've calculated that there's roughly 500,000 people in the Deep South that are renters that can become homeowners if they had access to a mortgage. So we are working to significantly expand our mortgage lending, but also partner with others to show them what it takes to structure affordable, responsible financing for renters and put them in a position where they can start to build assets.
I've read your bio. You are the Thurgood Marshall of financial services in the South.
Well, very generous.
And I want to get into community development financial institutions, CDFIs. Explain for our audience, what is a CDFI?
When Bill Clinton ran for president, one of his key platform items was to create a national network of 100 community development banks and 1,000 micro business loan organizations. He had been exposed to Dr. Muhammad Yunus, the Nobel Prize winner, who had created micro businesses, supported micro businesses in Bangladesh, had started a spinoff, a replication in Little Rock. And so President Clinton was familiar with that. And so he knew what a difference it made in lives in Arkansas. And so he wanted to bring that nationwide when he became president. And so he was successful in creating the CDFI, Community Development Financial Institutions Fund, in Treasury. And since then, it has driven billions of dollars into...
So prior to President Clinton, there was no CDFI?
No. Well, Shore Bank was one. Self-Help, the organization that I was a part of in North Carolina, was one. There had been loan funds across the country that had targeted opportunity gaps, banking deserts, and where traditional banks don't go. And so whether it's credit unions, loan funds, banks, people have done this work for a long time. In North Carolina, there were dozens of minority credit unions that were created in the 50s and 60s. They were never adequately capitalized, but those were the precursor to what we call CDFIs today.
You know, my antenna went up and you said banking deserts.
Yes.
I know there are food deserts and housing deserts, but it's the first time I've heard banking deserts. So you're saying that there are places where people have a challenge to even get basic banking?
Unfortunately, it's way too common. If you look across the country, you know, there are so many communities where there is not a bank, and often where there is a bank, the bank will only offer basic services. They'll cash your check and take your deposit, but you can't apply for a mortgage loan. You can't apply for a small business loan. You have to travel miles away, and so you really don't have access to one of the most fundamental tools that someone needs to climb the economic ladder. And so when you have a banking desert, that creates all kinds of opportunity deserts, because I think if one is honest, whether it's education, housing, grocery store, healthcare. At some point, you need capital to fuel those basic tools that one needs to achieve prosperity for a community and economy to be successful. But when you don't have a bank, then it has tremendous and devastating ripple effects. We talk about Hope as a financial institution, as community development, a financial institution, but we really exist to improve the financial health and wealth of people in the Deep South. Finances is a tool. It's necessary, but the end goal is helping people get in a position where they can support their families and contribute to their economy.
So the name Hope.
Yes.
Hope Credit Union, Hope Development Enterprises. Mm-hmm. Why did you decide to give this such a hopeful name?
It's interesting. My day job was a loan fund. Actually, the credit union started in a church in Jackson, Mississippi, Anderson United Methodist Church. And when went to Mississippi, that's where I joined, and I was talking to Pastor Stallworth about my background. I mentioned credit unions, and he said that he'd been trying to start a credit union at that church because there were payday lenders and check cashers in the neighborhood, but no bank. And so next thing I know, that's my ministry at the church. We decided to trying to come up with a name. I thought Mustard Seed would be a good name. There was already a Mustard Seed in Jackson, and my wife's name was Hope. I thought it was a good name, but I wasn't as presumptuous to suggest that. But the pastor said, I think it should be named Hope. And so it means a lot, both in terms of what we want to inject into the community, into families, but it also has a special meaning to me.
Now, today, how many states are you operative in?
We expanded from the Delta in 2002, 2003, both in terms of programs. We were just focused on business development initially. We are now in 5 states. We're in Alabama, Arkansas, Louisiana, and Tennessee. And if you look at that region, it's interesting, we're talking about deserts. If you overlay a map of that part of the country where slaveholding was concentrated prior to the Civil War, and today where you have the lowest education outcomes, the lowest access to healthy food, worse healthcare conditions, you can go on and on. They're very, very similar places. 1/3 of all the places in the United States where poverty has been over 20%, not for 30 years, which is a federal definition of persistent poverty, but for half a century, are in Alabama, Louisiana, and Mississippi.
Consistent poverty.
Deep-rooted, entrenched poverty.
How can we overcome what you've described as institutionalized poverty?
When you look back at that region, as I said, it goes back centuries. And when you have the extraction of wealth, when you have the inability to build wealth, that compounds, just like interest compounds. The deficits compound over the years, and you have what we all know today is a wide wealth gap between Black and white households. Roughly 10-to-1 is what typically is assumed.
Is that big?
It's 10-to-1. It's 100-to-1 when you look at Black families with children compared to white families with children. And so that puts you at a significant disadvantage when you think about what it takes to achieve stability and health and to put your children on the right trajectory. And so we focus on ownership, whether it's account ownership. 1/3 of our members didn't have a bank account before they joined Hope. Almost 50% either didn't have an account or relying on payday lenders and check cashers. So ownership, just owning an account, is an important first step to accessing the economic system. Home ownership, still the primary asset on one's balance sheet is a home. Most Americans, that's their primary source of wealth. And then business ownership. The gap closes to 3-to-1. It's not even what it should be, but business owners, Black compared to white, the gap is 3-to-1. And so in making resources available to them so that they can own is critically important. And that's our primary tool for achieving Hope's mission. And we talk about Hope as a financial institution, as a community development, a financial institution, but we really exist to improve the financial health and wealth of people in the Deep South. Finances is a tool. It's necessary, but the end goal is helping people get in a position where they can support their families and contribute to their economy. This country is increasingly diverse. The emerging majority of Americans are people of color, but disproportionately, they don't have the tools. Not afforded the opportunities to climb the education ladder, to build assets, and that ultimately is detrimental to your business interests.
When you bring the data that you've gotten out of your own lived experiences, do public policymakers, do they pay attention to the data that you bring, first at the state level, but also at the federal level?
It depends. I think that's why we were created to be a independent, a nonprofit organization. It's when you have policymakers that are supportive of investing in all communities, then we make progress. But that's not always the case. Mississippi is not Massachusetts at the state house and in the legislature, and so you often have policies that are adversarial to the communities that we serve. In Mississippi, for a black household that has income of $150,000 is less likely to get approved for a mortgage than a white household that has $35,000 in household income.
Today?
Today. That's data from the Mississippi Housing Agency. Those are systemic, deep-rooted, discriminatory structures that limit people's opportunity to gain one of the most valuable assets that a family can hold.
Wow. 150,000 versus 35,000.
That's right, and you can see similar data when you look at small business in Arkansas, where 9% of all businesses are black-owned. Only 1% of Small Business Administration loans go to black businesses. It's in a state where roughly 12, 13% of the population is black, 9% of all businesses, but 1% from the program that is specifically designed to help businesses that are fledgling, that have collateral shortfalls. That is not coincidental that program goes through traditional banks. And so that's why CDFIs are so important, particularly CDFIs that are mission driven. Another data point in Mississippi, we did analysis that showed who gets mortgages. And all banks in Mississippi, their lending to black homeowners is around 17%. Among CDFIs in Mississippi is 13%. So you're getting federal money, but you're actually widening the gap because there's not enough accountability injected into the program to make sure that the dollars go where they go. You can become a CDFI if you're in a low-income area. Well, if you're in a low-income area, you're not lending to low-income people or people of color, then you're not fulfilling the mission of a CDFI.
Given your own evolution, your educational background, do you promote or encourage young people to consider getting into financial services as a career opportunity?
Absolutely. One of our big priorities is working with historically black colleges and universities. They are located in the communities that need our services the most. HBCUs, and there are probably greater concentration of HBCUs, certainly in the South and in our region than most parts of the country. So we see them as a strategic partner. We have 9 HBCU interns that are financial inclusion officers helping to get the word out, and they go through our training. They learn how to be what it is to be banking. We had the Federal Reserve participate in a workshop around that exposed them to careers in financial services. We need to be in the room where these decisions are made at the highest levels. And so we're really excited about our connection with HBCUs and look forward to seeing what those young people do.
What has been the responsiveness of the students for this opportunity?
They've been great. They have opened doors. They've introduced their peers, their alumni networks to information that they did not have before. It seems to be received a lot more effectively when it's coming from one of their peers than it is from an old gray head like me.
Well, listen, you have a lot of wisdom. You mentioned that Mississippi is not Massachusetts. Well, that's true. But what I'm going to ask you now, your learnings from doing business, helping people to do business in the South, what can the rest of the nation learn from your experience in the South?
You know, Mississippi is the epicenter of so much of this country's struggles with race and poverty. And we have showed what is possible when you provide people with the tools they need to do what we all want. But some can take it for granted, and it's readily available in their neighborhoods and their families, but it's not in the Black Belt. It's not in the Delta. But we've shown that when we give people the tools, they can do anything that anyone else can do. And so we think that we are an R&D arm. We're proof of concept that people can do what we need all families to do, contribute to their economy, support their families, if they have access to basic financial services. Investing in communities that is disproportionately under-resourced makes economic sense. I think relationships only work when everyone gets something out of it. And certainly it's clear that the residents in these communities need the same tools that other communities have to climb the economic ladder.
What would you say would be the number one driver of future progress to make sure that each generation does better than the prior generation?
Making the case that investing in communities that, like those in the Black Belt, like those in the Delta, like any inner city across the country that is disproportionately under-resourced, makes economic sense. I think relationships only work when everyone gets something out of it. And certainly it's clear that the residents in these communities need the same tools that other communities have to climb the economic ladder. But it's not just good thing to do. It's the smart thing to do for businesses, for the nation's economy. And I think there are data that support that. So I would really encourage us to both emphasize the moral case for investing in these communities, but the business and economic case. And I think
so
when we do that,
ROI, there's a return on the investment.
Absolutely. I think any business that steps back and takes the long view knows that their future markets, their customer base, the economy is going to be dependent on a more prosperous, diverse population.
So William Bynum, the CEO of Hope Enterprises, Hope Credit Union, what gives you your greatest hope today?
When I go into Birmingham, we just merged with a credit union that was started in 1963 when Black folks could not go to a bank to make sure that people had access to basic tools. And that credit union this year merged into Hope Credit Union. So we are carrying the legacy of that credit union. We're carrying the legacy of credit unions in East Mississippi that were started by woodcutters who had to start their own credit union because the timber mills were charging them predatory rates for their equipment and inventory. There's so many shoulders that we stand on, and I know that this hill was so much deeper for them. We are a $1 billion financial institution. It's tiny in the scheme of the large financial institutions, but we have come a long way standing on the shoulders of those leaders, those freedom fighters who gave their all. And so I believe that we have their lessons to build on. We have lessons from you to build on. And I see that there are people who do amazing things when they just have the chance. So I have no doubt we'll be successful. I have no doubt that there's going to be barriers in the way, but I've seen those barriers knocked down, and we'll continue to do so.
Well, we wish you all the best, and I hope that the rest of the nation can learn from your success
Thank you.
in Mississippi and throughout the South.
Thank you. I really appreciate spending time with you.
Thank you.